The market is currently closed. As of the final bell on Friday, November 28, 2025, Datavault AI Inc., trading under the ticker symbol DVLT on the Nasdaq, closed at exactly $2.03. The stock saw a decline of roughly 4.7% during the session, oscillating between a low of $1.94 and a high of $2.24, with volume surging past 23 million shares, significantly higher than its typical daily average. If you are watching this over the weekend, these figures represent the definitive closing baseline before trading resumes on Monday. When you see a stock like Datavault AI, a company priced near $2 with AI in the name and wild volatility, the expectation is almost always the same. You expect a classic retail frenzy, a company riding the coattails of the artificial intelligence narrative with very little substance underneath, perhaps fueled by a few chat room rumors or a fleeting press release. The assumption is that this is just another speculative instrument for day traders on the Robinhood app or those looking for a quick flip on their interactive brokers trading platform. But the reality of what is happening with DVLT right now is fundamentally different and far more complex. We are not just looking at a retail pump. We are watching a massive, structured institutional maneuver involving hundreds of millions of dollars, complex warrant structures, and even payments made in Bitcoin. The reality is that Datavault is currently the stage for a high-stakes financial engineering event that most retail investors completely misunderstand. Let's break down the immediate price action we just witnessed. On Friday, the stock dropped nearly 5%, closing at $2.03. To the untrained eye, this looks like weakness. It looks like investors are fleeing. But if you look closer at the order flow and the recent filings, you see a different story. The volume was immense, over 23 million shares traded. When you see that kind of liquidity in a stock with a market cap around $600 million, it tells you that shares are changing hands at an institutional level. This wasn't just individual brokerage accounts panic selling. This was likely the absorption of equity related to the massive financing deals the company has recently closed. The stock touched a low of $1.94, a critical support level, and bounced back above $2.00, psychologically important for compliance and sentiment. The catalyst driving this entire narrative is the Scilex holding company transaction. This is where the story gets incredibly dense and interesting. Datavault didn't just raise a few $1 million to keep the lights on, they completed a massive $150 million transaction. This involved selling 15 million shares of common stock and issuing a pre-funded warrant for a staggering 263 million shares. And here is the detail that should make you sit up and pay attention. The payment for this transaction was reportedly made in Bitcoin. In a market where everyone is obsessed with Tesla stock and its crypto holdings, or asking if they should invest online in digital assets, Datavault is quietly executing nine-figure deals settled in cryptocurrency. This signals a level of operational agility or perhaps aggressive risk-taking that you simply do not see in standard industrial companies. However, there is a shadow hanging over this liquidity. Just days ago, Scilex Holding, the very entity that pumped capital into Datavault, sold over 422,000 shares, cashing out nearly $871,000. When a major backer starts selling down their position immediately after a deal, it creates a massive tension between the bullish narrative of strategic investment and the bearish reality of profit-taking. This is the friction point that is keeping the stock pinned near $2. Investors using Schwab Intelligent Portfolios or checking their Fidelity Investments accounts are seeing these headlines and getting mixed signals. Is Scilex a long-term partner, or are they liquidity providers looking to exit? The data suggests a bit of both, which creates a volatile, whipsaw trading environment. Let's step back and look at the broader context. Why does this matter? Because the semiconductor and AI data sectors are currently the most crowded trades on Wall Street. Everyone owns NVIDIA stock. Everyone tracks Apple stock for its AI integration. But the real alpha, the real differential return, often comes from finding the companies that are building the plumbing for the next phase of the data economy, widely referred to as Web 3. Datavault is positioning itself exactly there. They aren't trying to build a better chatbot. They are focused on the valuation and monetization of data assets. Think about that. In a world where data is the new oil, Datavault claims to have the technology to refine that oil, price it, and sell it. It's a subtle but powerful distinction. If you use investing sites to screen for data monetization, you won't find many direct peers. This scarcity value is what keeps the market interested. It's why you see huge volume days. Traders know that if this concept proves out, if the World Boxing Council deal leads to 5 more massive contracts, the stock could re-rate significantly. Now I want to pause for a second and get a pulse on the room. The stock is polarizing. Some see it as the future of data. Others see it as a dilution machine. Comment below how many shares of Datavault you currently hold and what your average entry price is. Are you holding through the volatility, or are you waiting for the dust to settle? Moving to the macroeconomic picture, we have to consider how interest rates and the broader tech environment affect DVLT. When rates are high, money is expensive. Companies that lose money, like Datavault, are punished because their future cash flows are discounted more heavily. However, with the Federal Reserve signaling potential shifts, risk assets have been bidding up. If we enter a lower rate environment in 2026, the cost of capital for Datavault drops and their path to profitability becomes easier. This is the macro tailwind that could help the stock. Conversely, if the economy slows and speculative capital dries up, stocks like this are the first to get hit. You see this rotation often in Fidelity mutual funds or SoFi ETFs, where managers rotate out of high beta names into safety during uncertain times. Datavault is the definition of high beta. It moves fast, often violently in both directions. What is the future outlook? Management has issued guidance that is aggressive, projecting $200 million in revenue by 2026. If, and this is a massive if, they hit that number, the current market cap of around $600 million looks cheap. That would be a price-to-sales multiple of 3x, which for a high-growth AI software company is very low. Usually these stocks trade at 10x or 20x sales. So, the upside scenario is a repricing of the stock to match its revenue growth. The catalyst for this would be a clean quarter, no massive dilution, just pure execution and revenue beat. If they can show 2 or 3 quarters of consistent growth without issuing more shares, the market will start to trust them. Trust is the currency they are currently lacking. However, the risk scenario is equally potent. If the Scilex deal was just a way to shuffle capital and the underlying business doesn't scale, the stock could drift back towards its 52-week lows of $0.25. That is the danger zone. Investors utilizing interactive brokers' fee structures to short the stock are betting on this outcome, that the hype fades and the fundamentals collapse. It is a binary outcome stock. It likely either goes to $5 plus on successful execution or sub $1 on failure. There is very little middle ground. We also need to discuss the AI label. Many companies slap AI on their name to get a valuation bump. Datavault needs to prove that their AI is proprietary and defensible. Is their valuation model truly unique, or is it a wrapper around standard algorithms? The patents they hold in the Acoustic science division are real and verifiable. The data science side is harder to audit from the outside. This is where your due diligence must be thorough. Don't just rely on investment help from generic sources. Look at the patent filings. Look at who is actually using the platform. The deal with the World Boxing Council is a good start, but we need to see enterprise adoption. For those of you using platforms like SoFi Invest or checking the Robinhood crypto tabs, the Bitcoin connection here is fascinating. By accepting Bitcoin for a major equity transaction, Datavault has aligned itself with the crypto ethos. This might attract a new class of investor, the crypto-native equity trader. These investors are comfortable with volatility. They are comfortable with complex new technologies. This could provide a floor of support for the stock that traditional analysis misses. It's a signal that management is thinking differently, willing to embrace the tools of the modern financial system, even if it scares off the traditionalists at Fidelity Brokerage. Another layer to consider is the insider activity beyond Scilex. We saw the CFO sell a small chunk of shares recently.